For this lesson, we will have a look at our trading profit and loss account. The specific objectives for this lesson is to define the trading account, to define the profit and loss account, and to draw up a trading account and a profit and loss account, including the year-end adjustments and closing transfers. Now, our trading account is our final account used to calculate our gross profit, and our profit and loss account is our final account used to calculate our net profit or net loss. The following is a list of accounts and balances extracted from the books of Ad-Elect traders as at 31 December 2018. Again, we have our list of accounts. Now let's go through our adjustments and then highlight the accounts that we need to enter in our profit and loss and trading account, and then also add the accounts that are not part of this list. So we will need to add our closing inventory or our inventory ending for the year to our trading account. Let's move on to the next one. The account of a debtor, Leah Shipu 1200, was written off as bad, and the account we need to highlight is bad debts. There we go. Let's move on to the next adjustment. Telephone account in arrears, $470. The account here that will appear in our profit and loss account will be the telephone account. So let's go back to our list of balances and highlight that account. There we go. Our next adjustment is for monthly insurance premium is $650. Insurance is paid until March 2019. The account that we need to highlight here is our insurance account. There we go. Let's move on to our next adjustment. Yearly interest on fixed deposit accrued. The account that we need to add is interest on fixed deposit, because interest on fixed deposit is not on our list of balances. So we need to add this account when we prepare our profit and loss account. Our next adjustment is rent had been received for 14 months. The account we need to highlight is rent income. So now let's go to our list of balances. There we go. Our next adjustment is for depreciation on vehicles, which is charged at 12% per annum straight line method. The account that's not on our list of balances is the depreciation account. So we need to include the depreciation account when we prepare our profit and loss account. And then our last adjustment is for depreciation on equipment, which is charged at 15% per annum using the reducing balance method. Again, we have our depreciation account, which is not part of our list of balances, so we need to include this account when we draw up our profit and loss account. Now the first account we need to draw up is our trading account. Our trading account will start with sales on the credit side, and the calculation of sales is put in brackets. The 171,500 is made up of sales less sales returns. Then we will debit our inventory at the beginning of our financial period, and the date we will write in brackets. The amount is 5,700. Then we will credit our inventory for our ending period, which is 31 December 2018, with 7,200, and the date again we write in brackets. Then we will debit our purchases, and how do we get our purchases? It's purchases less purchases returns. This will give us 61,500. Then we will debit our carriage inwards, 2,850, and that is all the entries that will come in our trading account. Now we need to make a comparison between the debit side and the credit side to see which has more in the amounts column. For this example, we have more on the credit side. So we add up our credit side and then we will get 178,700, and then we bring that amount to our debit side, and then now we subtract all of the amounts on the debit side from our 178,700, and that will be our gross profit. So now after we have calculated our gross profit, we will use that amount as our starting point for our profit and loss account. Now, just like the word states, trading involves buying and selling of goods, and those are the accounts that are entered in our trading account. For example, a business may buy goods from its suppliers. That is a purchase, and the account's name is purchases. And purchases we debit in our trading account. Then after the business bought the goods are sent to the business, and those goods we call inventory, and inventory we also enter in our trading account. And then once the business has its inventory, it can now sell it to its customers, and we call that sales, and sales is also entered in our trading account. Now let's move on to our profit and loss account. Now in our profit and loss account, we will record all other expenses on the debit side and all other income on the credit side. But we will open with our gross profit, which comes from our trading account. We will credit rent received with 19,800, and again we show our calculation in brackets. And always remember, our income and expenses should be recorded for 12 months only. The next income we have is interest on fixed deposit, 2,240, and the last other income we have is discount received, 1,350. Now let's move on to our expenses, which we will debit. We have our telephone account, 1,400. We have our insurance account, 7,800. We have our bad debts, 3,900. We have our interest paid account, 660. Water and electricity, 4,250. And salary and wages, 15,300. And our last expense will be our depreciation account, 19,650. Now again, we need to make a comparison between our debit side and our credit side to see which is the largest. And for this example, our credit side is the largest. So we need to add up all our amounts on the credit side, and then we will get $132,040. Then we bring that over to the debit side, $132,040. Then we subtract all of the amounts on the debit side from our total amount. Then we will get a net profit of $79,080. We need to write this as follows: capital between brackets net profit, because our net profit forms part of our capital account when we do our balance sheet. In this example, it showed that the amounts on the credit side was more than on the debit side. But if the amounts on the debit side was more than on the credit side, then we will not get a net profit, but then we will get a net loss. And our net losses are deducted from capital in the balance sheet.